We will continue on with part 2 of chapter 4. If you remember, in our first part, we talked about creating a personal cash flow statement. And this is where we identified your current cash inflows and outflows. Once we got a handle on where your money is going and where your money is coming from, it's time to go on to step 2. Step 2 is to take that cash flow statement we prepared in part 1 and change it into a budget, something that we can live with. A budget, again, we're going to forecast your net cash flows for a period of time into the future. So we're going to try to guess how much we are going to allow for each expense as we go into the future. We need to think of how the cash flow might change from month to month. Do you think that you have changes from month to month? And then think of your parents as some of the changes that they have in cash inflow and outflow throughout each month. Be sure to include expected yet irregular expenses such as school activity fees or vacations. Keep in mind your parents will have to remember that in August they have to pay some activity fees, or maybe you have a huge vacation plan for sometimes throughout the year. A good budget should include unexpected expenses also, such as car breakdowns, medical emergencies, and so forth. You are going to adjust the budget as necessary as you get more information. An annual budget, one you prepare for the entire year, helps identify times when you can save money and times when you'll be spending more because you'll be doing different things throughout the year. Remember, taking your personal cash flow statement and turning it into a budget for an entire year involves getting some guesswork and estimating. Obviously, you cannot plan a precise cost of events or expenses that have not yet occurred. Don't worry, you can always go back and adjust the budget as you get more information. This annual budget can help you identify times when you can save money and when you have more inflows or outflows. If you kind of take a look at this is Terrace's annual budget. You can see this is kind of what he saw in January and February, and then he'll take this and create an annual budget from here. Okay, and you can take a look at there's some things that are different and a lot of the things are the same. Step 3 then, once you've created your budget, you're going to work with and improve your budget. In a little bit, we're going to create a budget. But a budget will help you save money for major purchases, unexpected expenses, and unexpected opportunities. We've talked about unexpected expenses. Unexpected opportunities would be like if all of a sudden your friend came up to you and wanted you to go on a ski trip with them. Where are you going to come up with the money? A budget will help you anticipate future cash shortfalls. People might have a little bit less money, and then all of a sudden they realize they need to purchase some Christmas gifts. Okay, a budget is a great planning tool. You need to evaluate your forecasts and compare those with the actual cash flows. So again, you're going to create this annual budget, and then you're going to evaluate what you forecasted with what you actually are doing. The best way is to keep an expense journal to track your spending. The difference between what you forecast to happen and what actually happens is called forecast error. After looking at your forecast error, you may need to adjust your spending. Again, it's important to monitor your budget because errors can occur that need to be fixed. You may need to increase income or decrease your outflow to fix this. If you just look at this little example again, this is the last 3 months of Terrace's actual spending. The forecast is here, what he thought he would spend, and this is what he actually spent. Okay, so should he take any action? Obviously, Terrace needs to revisit his budget. His forecasts are not matching up with reality. So what he thought he was going to spend is not matching up with reality. he needs to increase his income or he needs to decrease his outflow. And again, he would go through and try to figure out what he's going to do from here. A checkpoint, what are the steps involved in creating a budget? 1, you need to create your personal cash flow statement showing a couple of months where your money's going and where your money's coming from. 2, you're going to turn your cash flow statement into a budget. And 3, you're going to work with and improve your budget. A budget is a system of saving and wise spending. It allows you to meet your personal goals. Having a budget will help you live within your income, make wise buying decisions, avoid credit problems, plan for financial emergencies, and achieve your final goals. Okay, so it helps you live within your income. Your budget may be a simple record of how much you make, how much you plan to spend, and how much you want to save. Or on the other hand, it may be more detailed where you're going to be real specific on each item that you spend your money on. And that's what we're going to do in here. A good budget should take very little of your time, but it should provide you with needed information on your spending and savings plan. So you're not going to spend a whole lot of time on your budget. It might take a little bit of time to get it all set up, but every day you shouldn't have to worry about adjusting your budget, making a lot of changes if you do a good job right away. Plan budget categories. We're going to figure out where the money is going to go. The first thing you should think about is setting aside savings first. Okay, and that's just paying you first. What a lot of people will do is they'll decide a certain percent that they want to save every paycheck. When they get their paycheck, they put that in savings first, and then they budget the rest of the money. Okay, if you don't do it that way, you may spend it. A poor plan is to go through your whole month and find out you have $25 left over and say, oh, yeah, that's the amount I want to put in spending or in savings. So again, you should set aside savings first, otherwise you spend it. There are 2 other subcategories we've talked about, and we need to plan our budget categories for our fixed expenses and our variable expenses. Remember, as a quick review, fixed expenses are costs that occur on a regular basis and they're for the same amount each time, like rent, house payments, insurance premiums, phone bill, television, internet. Variable expenses, remember, they involve living costs that differ from time to time and cannot be easy to estimate: food, clothing, utilities, medical, dental, and recreation. And we covered those already, so that's why we went through them fairly quick. Also, you need what are called allowances. Allowances is the amount of money you plan to use for each category. How much are you going to allow for food spending? How much are you going to allow for recreation and entertainment, and so forth? And you're going to figure out those categories. Plan budget categories, some common categories that a lot of people use, and again, you can set up your own, but some real common ones are savings, food, clothing, household, transportation, which includes your auto payments, insurance, operating costs, maintenance, and so forth. Whereas like your household would also be like your property tax, your insurance, your utilities, and so forth. Health and personal care could be like medical and dental expenses, medication, eyeglasses, health insurance, personal care costs. Recreation and education could be books and other reading material, theater tickets, concerts, vacations, school expenses, hobbies, and so forth. Gifts and contributions could be charitable contributions and personal gifts. And again, there's no really set budget categories. You need to figure out the ones that are going to work for you. A sample of a family budget you can see here on the left side. They just list all their income and they list their expenses and they keep track of it. This was in January. And again, before you make a budget, before this budget was made, they kept track of their income and expenses for several months ahead of time. Characteristics of an effective budget. There are 5. It's realistic. It should reflect current income and planned spending. It should be flexible. When unexpected expenses arrive, your spending plan should be able to adapt for these living costs. It should be evaluated. Every few months, you should evaluate the budget to determine whether it's still appropriate. Well planned and communicated. All family members should discuss financial goals, wants, needs, and plan for the spending. Again, we talked a little bit about this before, about communicating it with your family so everybody's on board with it. And a simple format. If it's too detailed and too difficult to understand, family members may not be willing to use the spending plan. So just as a review, the 4 main steps of budget process: we set our financial goals, we plan budget categories, we maintain financial records, and then we evaluate the budget. So we're going to take the personal cash flow statement that we prepared in part 1, and we are going to prepare a budget. So I'm going to flip to, you can flip that last page of your sheet, which looks like this right here. We are going to take this personal cash flow statement up here, and we are going to turn it into a budget. This is just a personal cash flow statement that we did for one month, but we could actually have it, a couple of these next to each other, and go through our budget. Okay, so when we start preparing this, we're going to take a look at which one is what are our fixed income and our fixed expenses, because those are the easiest ones to work with. So to start with, our monthly paycheck, I'm going to just put a star by the fixed ones. Okay, cell phone bill would be the same every month. Clothing's going to be different, so that's variable. Our college loan that we pay back, we have to pay back the same amount every month. Food's going to be different. Gifts and contributions might be different every month or are variable. The same with personal care and recreation. Our rent should be the same every month, so that should be a fixed. Our savings will be the same every month because, again, if you remember from our plan up above, we planned on putting a certain percent in savings every month. And our television will be the same every month, and transportation and utilities will change. So it's really easy to start with preparing a budget by identifying our fixed items. Okay, so we're going to go through there, and you can, up on the top, you'll just put your name. Please use your own name. Our monthly paycheck, if you look up here, our monthly paycheck is for $1,900. Remember, our birthday money is not a fixed income because that only happens once a year. It'd be nice to get it every month, but we are going to receive $1,900 each month. So we know that our total income is going to be $1,900. So we have $1,900 to budget. Okay, our cell phone bill. If you look up here, our cell phone is $55. So I'm going to put it down here just to start with. That will be the same. Our college loan, which is right down here, $150. We're going to pay that every month. And our next fixed is rent. Our rent is $300. Our savings, $380. And television is $33. So those are our fixed expenses. So if we were to go through now and add those up, 55 plus 150 plus 300 plus 380 plus 33, we should come up with, let's see, 8, 11, 19, 22, $928. Okay, so we have fixed expenses of $928. If you look at it, we have an income of, okay, so we have an income of $1,900. Our fixed is $928. So what we have left is $972 that can be split up among all the other expenses that we have. Okay, so now it's just a matter of going through here. If we look at it, our food, we roughly had $258. I'm just going to, for right now, put $300 in there. Okay, so that's $300 for food. Clothing, we put, what did we have up here? Clothing, $120. And again, that might be the same, it might not. I'm just going to go with clothing of $150. Gifts and contributions, we said $35. I'm just going to allow 50. And again, I'm just putting an estimate of what I could put in there. So we have 300, 150, and we added another 50 in there. Then we have personal care of $16. Okay, so personal care might be a little bit more. Maybe I'll put $30 in there. And then recreation and entertainment, it was a pretty slow month. It was $22. I might want to have a little bit more in there because on the average, I probably am going to go on vacation. So I'm going to put $150 in there. And then transportation should be about right here. We have 101. I'll probably put another 150 in there. And then there are utilities, and you can see utilities is 50 up there. I'm going to put, for utilities, I'm going to allow $75. So if you look at all the ones that I added, the variable expenses, if I were to add all of the numbers that are in blue up, I would come up with $905 for variable. Okay, so I started out with $972 to spread between all of my expenses. I only used 905, so 972 minus 905 would allow me $67 to put in other accounts. Because when you are all done, you want this number and this number right here to equal out. Okay, so that's $67. I can put it anywhere I want. If I wanted to, if I decided I wanted to move my savings up, maybe I want to move my savings up to $400. Okay, I could go through there real easy. It's $380 right now. I'll erase that. If I put $400, I have used up $20 of this, so I have $47 left. Maybe I realized I didn't put enough into personal care and I want to put another $20 into my personal care. I have $30 right there. Instead of 30, maybe I'll change that to 50. So again, that would take away another 20, so I have $27 left. Gifts and contributions, I could put it in any one of the categories I want. And instead of just blowing it on something, maybe I want to put it into, I know that it's not instead of blowing for something, but maybe I know I have a trip coming up or I want to go on vacation, I might change my recreation and entertainment. It is $150. I have $27 left, so maybe I'll move that up to $177. Now when I add up all of the numbers in my expenses, and so I add these all up, I will come up with gotta get the pen back, $1,900. And that is our goal, is to make a budget and split up our income with different expenses. Some people, what they will do is they will have an envelope for each one of these expenses. For example, they'll have an envelope that says clothing, and they put actually $150 in the clothing envelope. And when it comes time to spend money for clothing, they just take the money out of the envelope. The same with the food. They may put $300 in cash in an envelope for food, and then they'll go through and do it that way. Again, some months you might have some left over, but that's okay. It's better to have some left over than not enough. And so basically, this is a way how you put together your budget. If I were to clean this up a little bit, it would just look like this right here. Again, we're taking our cash flow statement, using the information from here to create a budget, something we can live by. If it comes down to it and we want to do something extra, we might have to say, no, it's not in the budget for it. So it organizes your spending.